NEXA Mortgage is the best place to work. I'm looking for loan officers who love to do all kinds of loans. That's why I'm talking about every loan type. This is our third video about every loan type. We talked about conventional, we talked about FHA. Today we're going to talk about VA loans in our every loan type series. VA loans usually don't require a down payment. This is veteran loans. This is loans for veterans. That's what VA, it's the Veterans Administration. That's what these loans are all about. They're for borrowers who have their VA eligibility. Okay, they also don't have to pay PMI or MIP. Now that PMI, we talked about in the other videos, PMI is on conventional mortgage and it's private mortgage insurance for loans with a down payment of less than 20% or a loan to value of greater than 80%. That's the same thing. It's just said different ways. 80 and 20 makes 100. If your loan to value is 80%, that means you're borrowing 80% of the value of the home. If you're talking about down payment, you're talking about 20%, which is 20% of the value of the home. So borrowers don't have to pay private mortgage insurance, nor do they have to pay mortgage insurance premium in their monthly payment. It makes monthly payments on VA loans a little lower. They're also a little lower sometimes because the rates are very competitive in VA loans. Now, sometimes I can find an FHA loan that has a better rate than a VA loan at the same time. Sometimes I can do it better with conventional. You'd never know. It's not exactly a science, but for the most part, VA loans they get a very competitive rate. Okay, a VA loan does have a funding fee that is tacked on to the value of to the amount of the loan amount at the front of the loan. The first time a veteran uses their VA loan, they have a 2.3% funding fee when they put a 0 down payment. If it's a 5 to 9.99% down payment, then they get a 1.65 funding fee. 10% or greater, it's 1.25. Now, if they put down 50% or 60% or 80%, they still have that 1.25 funding fee. So VA loans are not always the best bet for a borrower. Sometimes a borrower qualifies for a VA loan, but it doesn't make sense to use that loan. So that's why you need to talk to a professional that knows what they're doing and knows the difference between all the different loan types. This has been a video about VA loans, and if you're a veteran and you need a mortgage, I'd love to help you. Oh, by the way, there's one caveat that you should know. If a veteran has a service-connected disability, often confirmed, it says it on your VA eligibility certificate. If you have that, you might get no funding fee. So we should talk about that. And the funding fee, you're thinking about how much is that? Well, on a $100,000 home, that funding fee would be $2,300. On a $200,000 loan, that funding fee would be 23 times 2, which would be $4,600. On a $300,000 loan, you're looking at a $6,900 funding fee. Now you say, Josh, do I have to worry about that amount of money? No, we're going to finance that in your loan. It's going to really allow you to come to the closing table without a down payment. All right, reach out. I'd love to talk to you. Again, it's talktojosh.net. Reach out if you're a lender, you're a mortgage guy, you're thinking about getting in the mortgage business, you're a realtor, you're looking for the best loan type for your customer, or you know what? Realtors are always looking for the best loan type for their own homes. I would love to talk to you. Real estate agents are one of my favorite people to work with. I look forward to helping you on any and every loan type. Can't wait to talk to you again.